What if you could legally cut your tax rate from 40% to 4%? And that's exactly what I did for one of my clients. The client is a broker-dealer generating over $20 million a year fees and commission. And in this video, I'm going to walk you through exactly how we did it, step by step, using Puerto Rico Act 60. Hi, my name is Victor Delerme. I'm a CPA and I help business owners, executives, and investors legally reduce their taxes so they can reinvest in what matters the most to them, their business, their family, and their legacy. Let's get into it. My client is originally from New York, and he has been in the markets, invested in the markets, and running his broker-dealers for the longest. Now, if you're not familiar with that term, a broker-dealer is a licensed financial firm that buys and sells securities like stocks, bonds, and private investments, either for the clients or acting as a broker for its own account as a dealer. Over the years, my client expanded and grew the business. At a moment, he had over 50 reps throughout the United States, and the assets under management exceeded $1 billion. That translated into over $20 million in fees and commissions in total revenue for the company. As the business grew, it also got more complex. He was operating across multiple states, which created what we call nexus. Now, nexus is tax compliance obligations in the state in which the business is operating. He also had a sister firm where he offered insurance, retail, and institutional services, including raising capital for cities and municipalities. In short, he was running a big business, a growing business, and he was operating this business in a heavily regulated environment. But not only that, the taxes also became very heavy. For years, my client had been carrying a net operating loss, an NOL, from prior business ventures. Now, those NOLs had been shielding a significant portion of his income from taxation, but those NOLs were running out. The business kept on growing, and the revenues exceeded $20 million. He was approximately making $2 million a year, about 10% of gross income. That is not unusual in that type of business. And here's where it became expensive, if you will. Remember that he was operating in Nexus. Basically, he had operations in different states. He had reps in each state where there's commissions and fees paid to those reps, basically payroll. That means that there's taxation on those states, right? Now, he was also running his business where the tax rate was the maximum. So if you blend the federal income tax rate with the state income tax rate, it was exceeding or approaching about 40%. And that is very expensive. So do the math with me. Top $20 million in income. Net income about 10%, which is $2 million. Blend the tax rate 40%, that represents about $800,000 in taxes every single year. Now, as an investor, as a business owner, as an individual, you know that $800,000 is a significant portion of your net income. This is actual money, right, that you worked for. And yes, of course, you legally needed to pay it, so he paid it, right? And other businesses do actually pay those type of taxes as well because they want to comply with the rules and regulations. But in reality, if you have the best tax strategies in place, this is money that you actually can save in order for you to put to work and become more productive and or put the money to what matters the most to you. Sometimes it could be family, legacy, grow the business, retirement, and so forth. So my client actually thought that there must be a better way. And that's exactly when we started talking. And here's the thing, my client already had operations in Puerto Rico. He had reps in Puerto Rico that were conducting business already in the island of Puerto Rico. That gave us actually a real opening because he already had a footprint in Puerto Rico. Puerto Rico Act 60, specifically the export services portion, allows businesses to pay a flat rate of 4% tax rate on qualifying income. So there's no federal income tax, no state income tax, only 4% tax for the income that is sourced in Puerto Rico. So if my client moves the business to Puerto Rico, in essence, the tax rate will be dropping from 40% to only 4%. That means that instead of paying $800,000 in taxes, only $80,000 going forward. A savings of $700,000 per year. And that is, of course, legally. So here's what we did. Step number one, we did a business qualification review. We took a look at all the guidelines for Act 60 in Puerto Rico, and we made sure that the business is a good fit under Act 60 to export services. We analyzed how the broker-dealer operated, where the services were being rendered, and where the clients are located. Why? Because we wanted to make sure that the services are exported out of Puerto Rico to U.S. clients. And that is a qualifying activity per the textbook of Puerto Rico Act 60. Step number two, relocating the business. Once we confirmed that the business qualifies, then we started to execute the transition of relocating the business from the US to Puerto Rico. And this is exactly how we did it. We registered the broker-dealer entity in Puerto Rico. We obtained the required securities license to operate in Puerto Rico. We established all the proper books and records in Puerto Rico for the Puerto Rico operations for the Puerto Rico company. We helped set up banking relationships and set up bank accounts in Puerto Rico. And what is very important, we documented the business substance of operations in Puerto Rico under Act 60. Step number Number 3, the Act 60 application. The application process actually went very smooth, and I'm going to tell you why. The reason it went very smooth is because we did all the research. We understood the securities industries inside out for Act 60 purposes. We wrote a detailed business narrative that clearly explained the export services model under Act 60. Then, once we do that, we knew how to navigate the compliance requirements in both Puerto Rico as well as in the US. In other words, the application was successfully accepted. Remember that having the Act 60 application in and the acceptance is a very important milestone, but it's just the beginning. Compliance is paramount. Compliance is key. Why? Because you want to make sure that the 4% there's there forever. So that's why you have to make sure that the accounting is airtight. You have to make sure that the operations are well documented and the tax compliance always in check. And here's what we've done with our clients year in, year out after the application was accepted. We maintain accounting books and records for both operations, US and Puerto Rico. We perform all the reconciliations for the services that are being exported out of Puerto Rico to the US client. And we of course complete all the tax compliance and all the tax returns in Puerto Rico that guarantee the 4% tax rate. And what is very important is that we help our client manage the actual Act 60 decree reports that need to be in compliance every year. And then of course, what is very important as advisors, as CPAs, we provide ongoing business consulting for all the operations in Puerto Rico. Because the securities industry is very regulated, we need to make sure, as I said, that all the compliance is airtight, is ironclad. The accounting, the compliance, the Act 60 decree documents every year that need to be in compliance. We need to make sure that all those records are available for regulators, if that's the case, that they come and do an inspection, a surprise inspection, if you will. You want to make sure that your position is defensive in case of an audit. And that's why we've conducted all the research before we put the application. That's why we did the business description before we put the application. That's why we've done all the research just to make sure that we understood how the securities industries actually operate. And once the records are in place, then the business owner, in this case, my client, can breathe a little bit easier because now he's going to be saving a lot of money in taxes. In this case, over $700,000 in taxes every year. Now, if you analyze that over 10 years, we're talking about $7 million in taxes. That's he's being saved for 10 years. Now, let me tell you exactly how my client has been using the tax savings since that moment. He's recruited C-level executives to help scale the business. He invested in systems and technology, and then of course, he's taking care of matters that are important for him, which is family and priorities that are related for his long-term well-being. And that's exactly the goal. The goal is not only having the savings, but to put the savings into matters that are important to you. In this case, my client just put capital back into the business, just make sure that the business keeps scaling and flourishing, taking care of health, taking care of family matters, instead of having money being spent unwisely. If you're a business owner, an investor, or an executive, and you're thinking about relocating to Puerto Rico because you would like to reduce your tax rate from 50% and 40% to only 4%, that way you can have more money to what it's important for you, let's then have a conversation. Fill out the consultation below. Now let's talk. My team will jump on a call with you and we'll have a strategy session. And here's what's going to happen. We're going to be answering you all the questions that you have in regards to Act 60. We also will get to know about you and your business and your investments. And then we'll determine whether Act 60 in Puerto Rico is a good fit for you. Every situation is different, but if you're paying 30%, 40, or even 50% in blended rate, you know that you can do better than that. And you know that there's better possibilities out there. My name is Victor Delerme, I'm a CPA, and I'll see you in the next one.